winners are always there. So think about it. Okay, so let's trade like a smart money guy. Let's dive it. Okay guys, so let's dive now in the market. Now let's go. First things first. Okay, we looked about what smart money concepts. So today's lecture, lecture now, today's lecture now, looking about now smart money. Okay, yeah, let's see. Smarty. All right. So we are talking about smart money. Smart money concepts. Smart money concepts. Smart money what? Concepts. Okay. So we are talking about smart money what? Smart money concepts. That's the first thing. So how do these people work? You want to trade using smart money. So I'm going to explain for you how you can trade using smart money if you're a beginner in just few minutes. Okay, but after watching this video, you have to now keep practicing and test it whether you understood this strategy. Okay guys, yes, first things first, how do these people work? Remember now, in smart money concepts, you have to look at where is the liquidity lying. So in smart money, we talk about liquidity. Where are the liquidity zones? Where is liquidity lying? So some of you want to trade without knowing the liquidity. So you are a trader. First things first, understand where liquidity is before taking any trade. Understand where it is lying. Okay guys, yes, that's the thing. Okay, understand where liquidity is before taking a trade. So you have to understand where are this point is, where are the points are, where are they, where are they? Okay, so now these things need some seriousness. Okay, need some seriousness. So we have talked about in every strategy there is always that price action in every strategy. And I've talked about it. I've talked about it. You know, like so the market is full of smart guys and full of inventors. For you, you'll be there thinking that you're winning when you are not winning. Okay, so in every candle we talk about that there is always a battle. We are seeing battles in every candle. People are battling every time. People are there battling every time in the market. Okay, so now how do we trade this strategy? Smart money is the study of how institutions move the market. As simple as that. So you don't have to complicate things. So we looked about this thing yesterday in the mentorship class. Guys, those who were there, we looked about it in the mentorship class. So you are seeing how do institution move the market. How do they move the market? So to survive in the market, you have to have a lot of knowledge. You have to have refined skills. Your skill should be refined enough to survive in the market, no matter how much capital you have. Okay, I have seen guys blowing $1 million account on live real account in Western countries there. Western, someone blew $1 million in only 1 month. So what does it mean? The market doesn't care whether you have a lot of money or not. What it cares, it is going to test your skill. How skilled are you? Today you are the guy who is making $1,000, but after 5 years will you still make that money? So the market is there to test the skill. So one of the fathers we look at Warren Buffett. Is one of the smartest individuals alive in the financial world. Okay, the guy has been there over 50 years in the financial world, having started at the age of 14. Right now the guy is in 90s. So are you seeing the experience, guys? So the experience is over 60 years, even beyond, in the market. So those are the living people we see. Yeah, they know how the market now works. They know where to put their money. So those are the one of the key players now we can look at. Okay, so we as retail traders, we don't know. I've talked about the last video. Retail trading means that no matter how your strategy is, when you execute any trade, that trade, it has a 50% probability to go. Why is it a 50% probability? Because that candle which is moving, it has not yet closed. When the candle closes, then there you can decide who's the winner. At the end of the day, there will always be the winning side in that candle. So you come, your mentor told you that the strategy is 90% winning rate. You execute the trade, then stop loss is being hit. Maybe you blow the account. You have blown that account because, not because you are a bad trader, but because you are not understanding probabilities. Because in trading, we have also probabilities. The candle has its probability. So what is the probability that the candle will close bullish? So as a scientist, maybe you're a mathematician, what is the probability that you are going to live up to 100 years? What is the probability that you are going to die rich? What is the probability that you will die poor? Okay guys. So you have to see on those things. As a trader, ask yourself, what is the probability that you are going to grow that account? What is the probability that the market will be bullish? So are you seeing? Profitable traders think in probabilities. So you have to think in probabilities. What is the probability that this setup will happen? Don't predict. There's a difference between prediction and probabilities. Because I've told you guys, the probability of a person of a person dying is 1%. So there's no debate on that. Dying is 1%. So no matter how, whether what, 1% probability for a person to die. That is it. What is the probability for a person being alive? Is a half, 0.5%. Okay? So the highest probability is 1%. No, the highest probability is 1. Whole number 1. The lowest probability is 0. So there is no probability which is negative. It's not there. The lowest probability is 0. So if we are calculating probabilities in mathematics, we start from 0. 0. 0.1, 0.001, 0.00 what? 0.001. Are you seeing? Those are the probabilities. So if you did some math, if you knew some little math, apply it in trading. What is the probability that your setup will happen this week or next week or this year? What is the probability that you are going to grow that account? So trading goes with probabilities in every strategy. What is the probability that that strategy is going to work for you in that setup? So I have told you, the probability of failure is a half. The probability of success is a half. It has never been at 100%. You either be successful or you either be a failure. Okay? Even in trading, it is there. You either win or you lose. At the end of the day, you will either lose the trade or you win that trade. So it is a 50% probability in trading. It's not gambling. So the 50% probability, it is where you will find your 60% winning rate. Because if 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 we have 50%, if success is operating at 50%, then you calculate your strategy against the 50%. You are going to see that you, in the 50%, you have 70% inside it. Okay, 50 is a whole, but inside it you'll find another 70% inside the 50%. Okay, so that is it. Okay, let's go now. Let's start now. Yeah, smart money concepts. We have talked about the introduction, and we have talked also about its definition. Here we are looking at how institutions move the market. So first thing first, we have to identify where is the liquidity lying. Where does liquidity lies? We have the equal laws. Equal laws, we can see even the weekly time frames, the previous highs. Where is the previous high? Okay, let's take a look on this. Let's take a look on this, and we first backtest this. Then we shall see what I'm talking about. You will see what I'm talking about. Maybe let's say like this. Let's do like this. Let's begin from here. Okay, let's begin from there. Okay, so guys, so as a trader, you have to be able to because retail trading or trading, we are basing on historical data. So it means that you can't be a trader without interpreting history. So those of you who were hating history at school, it means trading is not for you. Trading is for those who can rely on history. We are relying on historical data that has been there even over 100 years. It is there. So go and read the data is there over 100 years. So you keep on interpreting. So these candles, every candle here represents history, past history, and every candle is representing human feelings. How are humans feeling this time around? Is representing greed, fear. So the market is moved by greed, fear. When investors are in fear of losing their money, the market will crash. You know it very well. When investors are in fear, let's go back years back. You will see that at some point investors were in fear of losing money. The gold market crashed at some point. You will see it there. So if people are in fear and losing money, people will remove all the money in the market. But when investors become confident in the market is going to be bullish. Why? If they are confident, they will hold their assets. No one will withdraw the money. But if there's fear, now that's what I'm talking about now. That's about now geopolitics. People are in fear of the market. People are fearing to lose money. Stocks are crashing. Look at Nasdaq. People are in fear now. Okay, that's how it comes in bearish. When they are in fear, for them I've told you that they will know who is the winner now. Then they will have to remove their money. Now, if they become confident, you see now some buyers coming around. How do they become confident? Now they start now again buying at the lower prices. An investor buys low and sells high. In trading, that thing doesn't work. Trading is different from investing. In investing, you will buy lowest, and sell high. So what's the difference between a trader and an investor? A trader makes money in a short term. You buy and sell assets within the shortest time or the shortest period of time, like a day or 1 week. You're a trader. For investing, you buy and hold for minimum of 5 years, minimum 10 years, 20 years. That's investing. Okay, that's investing. So a 20-year bond, 10 years, now he's cashing out his money. Then you start seeing the market is crashing. So the market is moved by major key players like that. They have major shares. So when they decide to move their money, what will happen in the market? The market will lose control now. People are not confident now. They will move their money in the market. So the retail will suffer. The retail trader is going to what? Is going to suffer. Okay, let's have a look on it. Okay, how do we mark equal highs? So you are going to see that we are going to mark the previous days. Now this is liquidity. How can we identify liquidity here? How you are seeing that liquidity is here. Equal highs, equal lows. This liquidity here, we are seeing it. We are seeing this point here. This candle you can see. This is the first candle. We are also seeing this second candle here. So this is the previous day high. We are also seeing this candle. Okay, so the liquidity ranges in terms of even higher in terms of time frames. If you're trading the weekly time frame, where is the liquidity lying? You're trading the monthly time frame, check out the liquidity. You're trading 4 hours, check out the liquidity. If you're trading smart money concepts, I repeat, smart money. But if you're trading support and resistance, you only need to base on price action trading. So price action trading also works better for people who are trading support and resistance. Price action works very better. Now let's have a look on it. So this liquidity lying up there. So now you have to identify the liquidity very well. Now let's go in the weekly time frame. Okay, the weekly time frame now. Okay, but let's first have a look here. You can see that price, if we play this price here, if we play this price, so up here liquidity is lying up here. Liquidity is lying up. Let me first change even the color here. So liquidity is lying up. Somewhere is lying low here. There's low here, and there's also something here. Also we are seeing some sort. We are also seeing some sorts here like this. So okay, now what will happen now? What do we do? Let's pray the price. If we pray, what are you seeing? Candles are moving. You can see them. You can see these candles are moving now. You can see. Okay, so what happened? What did it happen when this candle broke this previous high? When the candle broke these previous 3 candles, what did it happen? Institutional traders came in. You can see it is a clean candle, no wicks. How do you identify that guy is an institutional trader? Most institutional candles don't have wicks. Okay, they don't have wicks. Most institutions what? Most institutional candles, for them they don't have wicks at either top or bottom. So they move very fast. That's the thing, guys, you should know. Okay, so Okay, guys. Yes. All right. So you are seeing it like this. How are you seeing it, guys? So when you play, you are seeing that at some point we shall see that in smart money concepts we shall have to see some bit of fair value gaps. We shall see that price at some point will come. We shall see that price at some point will come and fill this. So there's a fair value gap here which is being left. Fair value gap. So do you know that a fair value gap can turn out to be an inverted fair value gap, and also it can turn out to be some bit of confluence. So what are the confluences are you seeing? So what confluences are you seeing in the market? Okay, so before complaining, what are you going to see in the market? So as I've told you that the market is a 50% probability, so you will either buy or you either sell. Okay, that is it. So if we keep on playing the price at this point now, this we are seeing some zones like this. Okay, so if we can see this brief introduction about how do these candles move, you can see now. You can see the market here. The market, if you can see it, this is a fair value gap. So it came up here to tap into the fair value gap around here at this point. You can see, so most people were hard penning orders here. So this strong candle you can see here, this is an institutional trader. These are institutional traders. So I've told you the difference between institutional traders and retail traders look like this in the market. Retail traders. For retail traders, look like, let me show you. For retail traders, they look like this. Okay. So retail traders look like that in the market. These are retail traders, these ones. Retail traders. For them, they don't have even volume in the market. They are like that. Those are retail traders. Now, institutional traders, how do institutional traders look in the market? To find it that we are having institutional traders, we shall see big candles like this. Okay, these are institutional traders you are seeing, guys. Okay, those are institutional traders in the market. You can see them. Okay, institutional traders are in the market. You can see now at that point. Okay, guys. Yeah, let's go. Let's move on. All right, let's move on here. You can see them. These are institutional traders. So if you keep on playing this price, keep on playing the price, you see that this fair value gap is being tested multiple times. So what does it mean? The fair value gap is now acting as a stronger zone for buyers or sellers to continue. So it has been a fair value gap now, but now it is now an inverted fair value gap. An inverted fair value gap can also turn to be like a support or resistance. You can see it. Okay, so what does it mean? You can see now at this point here we are seeing some bit of liquidity at this point. You can see it here. Okay, so at this point you can see that there is some bit of liquidity here. Now here the market going on breaking. So someone, maybe there is some retail trader who is targeting some buys like this. Maybe someone placed setup like this here. But look at the depth of the stop loss. Someone targeting a setup like this. But first things first, okay, someone has pending orders around here, and another guy is also having some pending orders down here, that in case there is a break here to what, maybe a break somewhere, his stop loss is within again this zone. Is over 400 pips. For him, is also targeting this zone like this. So I think how trading is interesting. For you are hoping for a buy, someone is hoping for a sell. So that's how the market is. So the market is full of battlefields. Battlefields every time and over again. So you keep on battling every day. And but at the end of the day, we shall see the winner. Yeah? Okay? At the end of the day, we shall see the winner at the end of the day. Alright. That is it. So this is how I've been showing you how these things could play, how these things could play out. So now you've seen them. Yes, this is the time frame. Now someone can ask that Austin, how can we do these things clearly? Now let's go on the 4-hour time frame. What's the 4-hour time frame now? Okay, let's get some other examples in the 4-hour time frame. 4-hour time frame. 4H. All right. Setup looks amazing. Okay, let's go now in the 4-hour time frame. How do we trade the 4-hour? Because that's the first thing, you have to identify the zones. So we are seeing that we are seeing some bit of sellers here. We are seeing some point. We are seeing this is so you mark highs and lows. That's the first point of identifying liquidity. Where is the highs, where is the lows? So we are seeing this. Okay, that one, this is a buy side liquidity. We can name it. Okay, it is called buy side liquidity. But for me, at some point, I always mark signs like this. Okay, we are seeing some buy side liquidity there. Then down here, we are seeing some sell side liquidity. Okay, so this is how institutions trade. Okay, this is how institutions trade. Now, those are the key points. So what's the zone? You have to understand which zone are you in now. Which zone are you in before complaining a lot. So we are seeing that this is a zone. Which zone are you in? Which zone are you in? So we are seeing that sellers are being taken out now. So the zone is over 2,000 pips. 2,000 pips is a very big zone, and this is gold, guys. So you are seeing that sell side liquidity, maybe we are seeing some liquidity sweep down here. And if we go in the lower time frame, we shall see that sellers maybe have been swept out. If we extrapolate this candle here, inside it, so what is inside the candle? Okay, what is inside the candle? So that's the thing you should be asking yourself. Okay, what are you seeing inside that candle is more important, guys. Okay, what you see inside the candle is more important. Okay, guys, is more important. That is it. Is more important, guys. So you have to sit and think about, so what is inside this candle is more important. So we shall have also to look about it. All right. Here I'm seeing some people are joining here. All right, thank you for joining. What is some point here? All right, guys, I'm going to drop this on the what, on the channel, so don't forget to like and follow. All right, so we are seeing this. What are we seeing inside this? What do we see? Eh? So retail traders, are you seeing what you're trading now? So you are seeing, what are you seeing inside this? What are you seeing? So this is how you could find being violated. Hmm? Are you seeing? What's the point now? Hmm? What's the point there? Okay. All right. Yes. So we are going to say that we shall mark the highs and lows. What do we expect now? We shall expect some bit of price here. Remember, we have some bit of rejection here, so we shall see some sort of retracement, retracement around here, and we could see some bit of liquidity sweep, market sweep down. Then we could see some bit of market moving like this, to the upside. Okay, guys. Yes. So this is what I could hope to see in the market. Now, what I've told you is like this. The market is a 50% probability, 50-50. You either win, you either lose. So at the end of the day, the market, that's why we have buyers and sellers. But at the end of the day, we shall see whether buyers have taken out sellers or sellers have taken out the buyers. So for me, what I do, I always do like this. Now, this is setup. I'll also see some bit of, maybe it was violated, then we shall move to the downward. Okay, then we shall move to the what, to the downward if setups are what, violated. Okay, so you are a beginner trader, so this is what you're missing. This is what you're missing. So today, this is what we are going to work out in the mentorship class at around 8 p.m. So please, guys, those who are there, please lock in. Make yourself prepared. Today we shall look about these key things I'm highlighting here. So this is the 4 hour. So what is the 4 hour doing? Now let's go to the 1 hour. 1 hour. 1 hour. So you're finished to see where is liquidity is, where is the buy side liquidity, where is the sell side liquidity is, where is the fair value gaps. You've seen the points now. Okay, let's go down now. Let's go down. What are you seeing, guys? Are you seeing here? Are you seeing here something? You are seeing it here. What's the point? So we either go short or we either go long. We shall either go short again, okay, or we shall either again reverse, and go long, and our target will be at the nearest liquidity. Okay, so that is it. So you are seeing the 1 hour. What's the 1 hour doing now? what is the 1 hour doing. Okay, so these are the setups. I'll either go short, I'll either go long. All right, so what are we going to see now in the 30-minute time frame? So the 30-minute time frame, let's first go there and we check it out. What are we going to expect in the 30-minute time frame, guys? All right, let's dive it into okay, let's go on the 30-minute. So guys, I've said I will drop the video on the YouTube channel. Yes, what are we going to see on the 30-minute time frame? What are we going to see? Okay, let's see this point of this so some of you now are selling and are buying. Now let's say like this, we are seeing some sort of, are you seeing this? So how are you going to trade this? So at this point you'll either go long, go long like this when there is a clean breakout. So we should see a clean candle breaking out, or a clean market structure shift. We should see a clean candle breaking out like this. Market structure shift the upside. Market structure shift, and we should see a bullish change of market structure. So we should see a bullish change of market structure. Bullish change of market structure. We could see something like this. And how is it violated now? Bullish change of market structure. So you can see now at this point, if we see this setup, that you will see that maybe this one has broken its high. Coming back is going to fake out. We could see something again like this. Now coming back in the zone, we could see now so we should do something like this. Bullish choke. This is what I'm expecting to see. A bullish choke. So that's the 30-minute doing. So the 30-minute is showing that gold is trying to retrace in the upward. Why? It has reached a strong turning point. How? If we measure the depth, dropping 2000 pips from, because 2000 pips in most times gold normally traces in 1000 pips or 2000 pips. So this point where gold is right now is a retracement zone. So what are we going to see? We could see gold consolidating either tomorrow or this week again, because now it has dropped many pips since the week since Monday. Gold dropped. Now what are we going to expect in the new week, or what? Prices are going to start to consolidate. So the consolidation zone will also be 1000 pips. But like it or not, for gold it will has again to first retrace. It could retrace maybe 1000 pips halfway before now continuation. So that is it. So at this time I don't expect people to again be looking for more sales. Why? Price is going to start if you look on in the 30-minute time frame, the 30-minute time frame is showing that sellers are losing momentum in the market. You are seeing, guys, you can see this candles clear. Sellers are losing momentum in the market. So any sale which is going to occur in this zone is going to be a fake out. Okay, it will turn into a fake out. So my last time frame, if you go in the 15-minute, I mostly use 15-minute for entries. Okay, 15-minute for entries, guys. So yes, what am I expecting? So after expecting things, so what am I seeing? I'm seeing order blocks. I'm seeing order flow. So you are a smart money guy, you have to check on those things. What are you seeing in the setup? You are seeing order blocks, you are seeing fair value gap. So you have to confirm all those before your entry point. Someone could ask, what's the difference between an order block and order flow. So an order block is inside an order flow. That is it. So an order flow is a big zone. Order block is inside an order flow. So that is it. So we could see something again testing back in the order block. Now we could see something like this. We could see something back like this. If price returns back in this zone, we could see some bit of huge reaction again. So those who are selling now, don't risk too much, because you are seeing that prices are trying to retrace. So as I have told you guys, since today there was CPI, you can't know how the day is going to end. But I've told you, at the end of the day, buyers and sellers, should be a winner. So some of you, the moment you try to predict the market, that the market is going to sell the whole day, you may end up losing all your money. Why? You can't predict the market. Even Mark Douglas wrote it in his book, The Disciplined Trader. You can't predict the market. The market plays on its own. The market is like an ocean. You go, you get the fish. If there's no fish, leave the ocean alone, come back the next day. So you can't force your setup to happen, and you can't force the candles to move. So you can only catch up with the institutional traders. So as I've told you, that institutional traders, they are the only ones who move the market. So if you catch up with them, with their volume, then you can move with them, then you make money. Okay, but if you come, you move. Now let's take a point. You want to enter in the 15-minute time frame. Now for an institutional trader, his stop loss is going to be doubled within this zone. So he's going to risk 200 pips down again. Stop losses, most of the stop losses here, people who are buying here, your stop losses should be around below. You multiply this, now it is around here. So stop loss, if you're buying at this point, your stop loss should be around 4050, 4050, the gold price now there to survive. But if you're buying in this zone and your stop loss is within this zone, then you should be a scalper now. Don't hold for long, okay? Because it is a risky zone. Okay, it's too risky. Why? Confirmations are not yet, okay? And remember, we are still in the daily bias, but regardless of the daily bias, prices can retrace. Okay, that's it. So for those who are selling, your stop loss should be even above this point here. Above. You're selling gold, stop loss is going to be above this point. All right. So where you place your stop loss matters a lot. If it is near, you are going to be taken out easily. Going to be taken out easily, and you are going to blame your broker. So your broker has nothing to do with you about the stop loss. Okay? Yes. So this smart money now, it has ended here. So I've showed you how you are going to. So I've showed you how do you mark liquidity. I showed you the order blocks. How do order blocks work? I've shown you them. Then I've showed you an order flow. Order block is within an order flow zone. Liquidity zones lie up. In every rejection, there's liquidity there. Mark out the previous high, mark out the previous lows. Okay, if you're daily, mark out the previous days and lows. Okay, where is the fair value gap? If you're a smart money guy, where is the fair value gap lying? Where is the liquidity lying? Where are the double tops? Where are the double bottoms? Where are the equal highs? where are the equal lows, where are the triple highs, where are the triple lows. All those things you have to master them as a smart money concept guy. Okay, that's the thing, and that's what I'm training for my students. I'm teaching them how to do things the way I do them. Okay guys, such that they can become better institution traders. Okay, so the goal is to train institution traders, not retail traders. For retail traders, uh you don't need even to use smart money to make money. Retail trading is more fast gains. You come, you make money, you go. Institution trading, you are trading for generations. Institution traders, you trade for generations. You trade for your mother, you trade for your grandsons, such that if you happen to be alive, they will ask you one day, eh, how did you make it up to here? Now there, institution traders think long term. Retail traders think short term. So in this video, you'll have to comment down on the YouTube channel now. Are you and do so what is your goal in trading? If it is institution trading, you should think long term. Long term means you have to have the right strategies to survive. Not every strategy can survive the market condition, like it or not. There are strategies where, as time goes on, they will not survive in the market, like it or not. And institutional traders have also their own strategies, the way they trade. An institutional trader trades differently from a retail trader, and that's what makes them uh, inject more money in the market, because the market moves when money is being injected. If few people have injected less money, the market is not going to move. Okay, so at this point we are ending here. The next, we shall do our next session next time or next week, either on Monday or what. Okay, but I'll drop the video. I'm going to share this video to you guys on the YouTube page. Now secondly, we are also processing some certificates. Okay guys, now you have to come on board now. Come on board and have a live chat. So I don't in our trading community, we don't recommend traders to only show profits. You show the profit, you have to explain how did you make that money. Yeah, so you explain the setup. How did you get the setup from A up to Z? Okay, by explaining, you are sharing knowledge, because knowledge can be inherited, but money can't be inherited. Okay, knowledge can be generation, if you, because science tells it well. Continuous variation, there's nothing like money. Continuous variation is there's knowledge and intelligence. So you'll find it that at some point, yes, Ali FX, thank you for joining. How is Kenya? So you'll find that at some point the money is going to stop in some generations. So money is not a continuous variation. So but knowledge and the wisdom is continuous. That's why the white people keep on printing books. Why do they print books? They are saving knowledge for the future generation. And that's why also I started making books for my trading community. So I encourage every trader here to make his own book. Make your book about